started. So we are starting off with where we had left off yesterday, and that was your debtors collection schedule. So I'm going to go through one more example of the debtor schedule, and then we'll look at your creditor schedule. So I had asked you to complete the question in your textbook, question 3.1, but I'll go through that when I see you again on campus. So we'll work through those solutions then. Let's continue with the debtors and creditors and your cash budget and so on. So your debtors schedule, remember, is based on everything that will be received from your debtor in a particular month or a particular period of time. And it is based on your sales. Our concern here is the credit sales. And they would generally give you the figures for a couple of months, and you're going to draw up the schedule for the month that they specifically ask you for. And remember, we said that this would be the months that go into your columns, the heading of your columns. So this example says to you, you are the financial manager for Jones Limited, and you are required to prepare the debtors collection schedule for the first half of the financial year. So they asked you to draw it up for the months of January through to June 2015. Then they gave you the sales revenue figure in total. Remember, they said sales revenue, not credit sales, which means that you will need to convert this to a credit sales basis first and then use it in your calculation. So they gave you the credit sales for, sorry, the total sales for Jan through to June. And then on the next slide, they said to you at the top that these were also the sales for the 2 months prior, which was November and December. So they gave you quite a bit of information in terms of the sales figures, which means that, remember, we said going down the table vertically, you always start with the very first month's figures that you had been provided with. So, for instance, here it started off with November and then December, Jan through to June. So you will start with November when you indicate the months included in your schedule. So you'll go November, December, Jan, all the way through to June. Okay, so I'll show that to you again though when we draw up the schedule. Then they said to you that 65% of your sales are on credit, which naturally then meant that the remaining 35% would be in cash. So I also showed you yesterday that should they ask you to include the cash portion, then you will also add that on at the bottom of your schedule. So cash versus credit, your credit was your 65% of your sales, which would naturally mean then that the remaining 35% was in cash. Then they gave you the actual schedule according to which your debtors will repay you. So they said to you here that 10% is paid in the same month as a credit sales transaction. So most likely at the end of the month. And they buy at the beginning of the month. And then 55% is paid in the month following the month of the transaction. 28% is paid in the second month following the month of the transaction, and 7% is irrecoverable. So remember, I said to you the bad debts or the irrecoverable portion will never be included in the schedule or the budget because these are showing funds that are actually received from your debtor. Something that's written off is naturally not received and it cannot form part of your cash flow. So we're ignoring the 7%. On the next page, you're going to see the template for your your debtor schedule. So as I said to you, the months that you're drawing it up for are the ones going across at the top. And they said to you, draw up a schedule for the first half of the year, which is Jan through to June. So this is why we have Jan all the way to June on your schedule at the top. Then in the first column coming down, you have, and I was explaining this to you as well, starts off with the very first month, and you're going to continue. So November, December, and then you also had sales figures given to you for Jan through to June. So in that first column, you have November all the way through to June the next year. So these are the months for which you are drawing up the schedule, going across. And then these coming down are the months where the sale had taken place and you're now acknowledging what will be received in the month of Jan through to June. So remember, it is easier to include one additional column here to calculate the credit sales portion. So that is 65% of your total sales. So you're going to go to all of your sales figures for the year November up until, for the month November up until June and calculate 65% of the sales. So you'll then say 387,000 multiplied by the 65%, and that would have given you a figure of, for the month of for the month of November, 251,550. Then for the month of December, it's exactly the same. You're going to take the figure for December, multiply it by 65%. So 132,000 multiplied by 65%, and that is 85,800. And then the same for Jan all the way through to June. So all of these figures are individually multiplied by 65%. So I'm just going to write the answers down for you on this page. So for Jan, it would have been 119,080. For February, 226,200. For March, 179,400. April, 318,630. And May, 230,760, and that's 188,500. Okay, so those are your figures for the months of November through to June. So now you're going to look at your schedule, determine what the payments are that are received in each particular month. So the schedule said to you 10% would have been paid in the same month. So the idea here is if it is paid in the same month, most likely the transaction would have taken place, for example, on the 1st of the month, let's just say the 1st of March, and the customer would have taken the goods then on credit, but they would only pay you, for instance, on the 31st of March. So it's not treated, as a cash sale because they did not give you the money immediately on the 1st of March when the transaction took place. They only paid you, even though it's in the same month, they only paid you on the 31st of March, and this is why it's regarded as a credit sale. So here it's 10% in the same month, 55% a month after that, 28% 2 months after that, and we disregard your bad debts. So here, if the sale took place in the month of November, and we're obviously starting off with November because that's the first month in our schedule. So let's look at that. So here, the sale takes place in the month of November, but you are looking at, is there anything that would have either been received in January, in February, in March, April, May, or June? So that is why we are starting off with November. It's the first month, and it's potentially going to be that some of this amount of money is received in any one of those months going across. So if the sale took place in November, then the 10% would be received in November itself, which is not part of your schedule. The 55% would have been in December, also not still part of the schedule because we're starting in the month of Jan. So it's starting here. Then the 28% would be in the month of Jan. So this now can be included in the schedule because we do have the month of January as our first month there. So now it's 28% of the amount that would have been on credit. So you're basically going to say now this 251,550, you're going to work out 28% of that, and that would give you a figure of 70,434. So remember yesterday I said to you that you will show the working out of this within the block. So I'm going to just check with the IIE if it is, because I know that they've changed some of the rules since last year. So I'm going to check with them if it's necessary for you to show the calculation. Generally, they ask students to include it in the block or below the schedule itself because they do award marks for it. But if they don't require you to do it, because there was also a change in the central academic team, so I am not sure if it is the same as last year, but as far as I know, over the past couple of years that I've been lecturing this, there always has been marks allocated to it. So let me just check for you if there's any change, because there is a change in the central academic team as well. So if there is no need and there is no mark allocation for you to show that working out, it obviously does become less time consuming and easier for you. And you don't have to actually write out the working out of each one. You're just going to work it out on your calculator and write down the final answer here. So I will get back to you on that as soon as I know whether they are allocating marks to it. And then we can just save you a lot of time and effort in that way. Okay, so the next month, then we've taken care of the month of November, because after the 28%, it's then your bad debt. So we're not concerned with that. Let's move on to the next month then. So for the next month of December, if the sale took place in December, then 10% would be received in December itself, not part of our schedule. 55% would be the next month, which would be Jan, which is in our schedule, and the 28% would be the next month, which is Feb. So 55% and 28% is what we're accounting for. So this is in Jan and Feb. So you're going to take the 85,800 for the month of Jan, and you're going to multiply it by the 55% for the month of Jan. And then for the month of Feb, it would be the 28%. So for the month of Jan, that is 47,190. And for the month of Feb, it's 24,024. Then for the rest of it, we obviously don't have anything else for the month because the bad debt is not included. Then you're going to go to the month of January itself now. So this figure, we worked out the credit sales portion, and if the sale took place in Jan, then 10% would be received in Jan itself. The 55% would be in Feb, and the 28% would be the next month, which would be March. So 10% in Jan, 55% in Feb, and 28% in March. So you're literally then going to work those out. So 119,080 times your 10% in the month of Jan, that gave you 11. Sorry, guys, I got disconnected there for a bit. Can you hear me? Okay, so let's continue. Thank you. So as we were saying here, we have the figures for the month of Feb and March. So I'm just going to write what the specific percentage would have been in that month instead of just writing the whole thing, which is going to take a while. So that was the month of January. Let's look at the month of Feb. So if the sale itself took place in the month of Feb, that's fine. Okay, so if the sale took place in the month of Feb, then 10% would be received in the month itself, 55% in March, 28% in April. So you're going to take the figure from the month of March, multiply it by, so it's the 226, 200, this amount, multiplied by 10% to be received in Feb itself, 55% to be received in March, 28% to be received in April. So you'll work out those figures. That's 22,620 in Feb. In March, it's 124,410. And in the month of April, 63,336. Then for the month of March, it's going to be 10% in March, 55% in April, 28% in May. So March, April, and May are the months you're working with here. So that's going to be 10% in March, 55% April, 28% in May. So this is 17,940, 98,670, and then the last one is 50,232. Then for the month of April, it's going to be April itself, May, and June. 10%, 55, and June is 28. So that's April, 0.1 or 10, 55 in May, 28 in June. So that would be 31,868, 31,868, 175,247, and 89,217. Then for the month of May, there's only going to be 2 payments. So this would be the figure for May itself, the 10% in the same month, 55% the next month, which is June, 28% in July, but we don't have July in our schedule. So it's just going to be the 10% in May and the 55% in June. So this would be 23,076 in May and 126,918 in June. And then for June itself, it's only the 10% because the 55% would be in the next month, which is July, and the next one would be August. So that is not part of our schedule. We are stopping with the schedule for the month of August. So that would be your last figure. So here it is 18,850. and that is your debtors schedule. So most of the time they do ask you for a total as well. So let's include a total column, a total row here at the bottom. So it's going to be for every month up until June. So for the first month, it's 129,532. Okay, so those are your values for your debtor schedule. Are there any questions? It's pretty straightforward, and as I said, it is a section that you can gain a lot of your marks in for test 2, so please do make note of that. Okay, so let's look at your next bit. So there is another example here that you can try out as well on your own. So I'm going to skip that and move to the next bit. Okay, so the next thing we're looking at is your creditor settlement schedule. It's almost the same thing, almost identical to what we had looked at with your debtors, where we're taking the amount of your, and in this case, it is based on your purchases because we are looking at your creditor. And just like we saw with your purchases, just like we saw with your sales, purchases can either also be in cash, where you will pay for it immediately when you're purchasing from a supplier. Alternatively, you can purchase from a supplier on credit. And the idea is the same in terms of the recording is available through your Blackboard. So I think I can show it to you here. Oh, sorry, wrong thing. Okay, no, it's not allowing me to. Okay, it's not allowing me to show it to you here, but you'll go to Blackboard, and where you see the course room, this is the same place you'll access it from. So you'll see that there's three black dots on the, black lines on the left-hand side. It's a little panel. It looks like this. Lines. You'll select this, and there's an option that says recordings. So you'll select the recordings, and then it has all of the recordings that have taken place online already. You'll record it, you'll access it from there, and please do make sure, remember to access them because they are being deleted. So you need to make sure that you have those. Okay, so back to what I was saying here in terms of your purchases. They can either be in cash or on credit. And whatever is paid for in cash would be paid for immediately. Whatever is on credit is naturally paid over a certain period of time according to whatever the company's policy is. They will tell you that this is the company's policy. Like we saw in the examples we were working with, generally it's that this certain percentage is paid in the next month, a certain percentage paid in the month after, and so on. It's the same idea. It's just that now we're working with your purchases instead of your sales, and your purchases is based on your cost of sales. So here, please highlight in the second point, it says to you, we need to look at your cost of sales because this indicates how much we have purchased. And again, it's either in cash or on credit. We are only concerned with the portion on credit. So we are drawing up a creditor's schedule according to which we will pay our creditor. And sometimes they might ask you to do a total payment, like I had shown you yesterday, where you'll draw up the creditor's schedule, but just at the bottom of it, you'll also indicate any payments that were made in cash for those particular months. So I'll show that to you here again as well. And then you're going to just total up your someone has their mic off. Please can you switch it off because it's echoing on my side. Okay, so let's look at an example of this. Remember, we're looking at purchases or cost of sales and your credit purchases only. So here they have said to you that below were the purchases made by Stanley Limited for the period April through to July 20.12. They've given you the figures from April through to July, and these were the total purchases. So you didn't first need to work out what portion of cost of sales made up your purchases were made up of. Sometimes instead of giving you the actual purchase, they'll say to you, for example, the cost of sales for the year is maybe, or for the particular month is maybe 600,000 Rand. And then they would say to you, and we had seen this in one of the previous examples when you're working with your statement of comprehensive, your statement and some of your um, calculations based on your ratios. We saw that the cost of sales, a portion of it would be your purchases. So they would say to you maybe 40% of your cost of sales is made up of purchases. So you would first need to work out the amount that is purchases. So you would take the 600,000 and you would work out 40% of that. And then that would be your total purchases. So let's work this out. So that's 240,000 Rand. That would be your total purchases. And then now you're going to split this up according to what portion is in cash and what portion is on credit. So just make note of that like we saw in the ratios and your statements, there might be a situation where you will be first required to calculate the value of your purchases and then use your purchases to carry out this creditor's schedule where you'll determine what percentage was on credit and then look at the schedule according to which you will repay your creditor. So please make note of that. This example, however, was quite straightforward. It had the purchases already, so you just needed to work out what percentage was on credit. So they gave you the figures for the month of April through to July. They said to you 65% of your stock is bought on credit. So we'll work out that 65% first. And then these are the terms according to which we repay our creditors. 50% is paid in the month following the purchase. And this qualifies the company for a 5% discount. So we need to bring that into play as well, where there's discount included. And then 20% is paid 2 months after the purchase, and the remaining 30% is paid 3 months following the purchase. Then they gave you on the next page the previous 3 months purchases. You'll almost always find this where they'll give you figures for the month, a certain number of months, but then they'll also give you figures for 1 or 2 months before that, because like I said, it's possible that even though the sale or the purchase took place 3 months ago, we could only receive the money this month because of the fact that it was on credit, and they will owe you according to the schedule that was created. So, this is why they give you months before the months that you are drawing up the schedule for, because of that schedule in terms of your payment period. So here it's the months Jan through to March that they also gave you, and then they said to you, draw up your creditor's settlement schedule for the months of April through to July. So the months that they ask you to draw it up for are the months that will be in your columns going across, as you can see here. That will always be a given that is going to be the months going across your table. Remember, you do have to draw up these tables as well. So please make note of which months go where. So it's April through to July at the top. That's April, May, June, July. And then from the first block here, as you can see, sorry, here from the first block, it starts with January because January was the first month for which they gave you information. So you start with Jan, Feb, March, and then you'll go to the figures that were also given to you here in this little block, April through to July. So that would be Jan through to July in this first column, as you can see here. So now that you know which columns you're including, you will draw up your table, and you'll also include a column for your credit purchases, because this is making it easier for you to have all of your figures in one place and just work with the credit purchases. Also, there are marks allocated to that, so it obviously is quite necessary. So to work out your credit purchases, 65% of it was on credit. So you're going to take all of these figures and multiply each of them by 65%, as well as the ones on the previous page, all of these multiplied by 65%, and this will tell you your credit purchases. So I am going to write them down for you. Please make sure you are taking this down. So 101,400 is the figure for the month of Feb. Okay, so I'm not going to include the figure for July because you'll actually see that it doesn't need to be included in the table at all. So you can just strike off the month of July, because any purchase that had been made in the month of July is not going to be paid for in any one of the months, April, May, June, or July. So it doesn't even need to be in the schedule in the table. Okay, so we have January up until June for your purchases. We've worked out 65%, which was on credit. Let's work out, according to the schedule, what will be received in either April, May, June, or July. So here you are starting with the month of January. Remember, that is the first month in your schedule. And the schedule said to us 50% is paid for in the month following the purchase here. So if the sale takes place in the month of January, that would be February. So February schedule, we're only starting our schedule, remember, from the month of April. So that's our first month. So we are obviously not accounting for that one. Then, sorry, let me just write this here. That would have been Feb. Okay, then the 20% would have been in March, the next month, 2 months after the purchase. Again, not part of our schedule, so we can ignore that. And the last one, however, the 30% is paid 3 months after the purchase, so that would be April. So now we can work out the 30% that would be paid in April. So you're going to take the credit sale of this 135,200 and you're going to work out it. So this is going to give you 40,560. Then for the month of February, so that there's nothing else that will be included here. So for the month of February now, it's going to be the 50% in March. The next month, April will be 20%, May would be 30. So we're only concerned with the April and May figures, that's 20 and 30. So 20% here, so I'm just 0.2 and 30% here. So that's going to be 20,280 and then 30,420. Then for the month of March now, you're going to look at what will be paid when. So this is going to be if the purchase took place in March, 1 month later is April, which is in our schedule. May is 20%, June is 30%. So for the month of April now, you have the 50%. And this is the first time that we're actually recognizing the 50% because the rest of the months actually didn't have the 50% being paid. It was only the 20 and the 30. So now with the 50%, they said to us that if we pay if we pay the client, the supplier, in the month following the purchase, then they're going to give us a 5% discount. So we need to bring that into play as well. So if this amount is 121,500, we need to first work out the percentage that we would have paid. It would have been 50%, but because they're giving us a discount, we're paying not the whole amount, we're paying 5% less, which means 95% of the amount is what we're paying. So we're going to then multiply that further by 95%. So please make sure when you do have the discount that needs to be accounted for in the particular period, you are showing that working out of the 121,500 times 50%, and that amount would have been, so if you took the 121,500 times 50%, that would have been 57,712.5. We would have had to pay this amount, but because they gave us a discount, it's basically saying that you're paying 5% less. So instead of working out the 5% and then removing it, the easiest way is to say that instead of paying 100% of this amount, this full amount, we're now only paying 95% of it because we had received a 5% discount. So this is why we are multiplying by 95%. So here, this gives us an amount of 57,000, sorry, not 57,000. Yeah, 57,700 and, sorry. Okay, and then here it's your 20% and 30%. So that is 24,310 and 34,465. Okay, so that is your sorry, this yeah, that's right. Okay. So here is your amount including the discount, the 20% and the 30%. Then for the month of April, it is 114,400. So it's exactly the same thing. You're going to take 114,400 that's paid the next month. Remember, according to the schedule, if it took place in April, then the 50% would be in the month of May. This would be June. This would be July. Okay, so 50% in May and 20% in June. Sorry, let me look at the questions. No, it is not. Let me just check that. 121,500 times 0.5 times 0.95. Oh, yes, sorry. I think I typed that in wrong to the calculator. Yes, 57,713. Thank you for that. Sorry, I had typed in 550 here instead of 500. Okay, thank you for that. Okay, so same calculation for, so I'm going to leave this at the bottom. Same calculation for the month of April. So that's 114,400. And that's multiplied by the 50% and then times the 95. So this would be 54. Okay, so for the table, generally they do ask you to round it up, but they will specify to you in the particular question. So most of the time, specific to this question, they'll say to you at the beginning of the question, round up your answers to a whole number, or they'll say just leave it as 2 decimal places. If they don't specify to you, then you leave it as 2 decimal places. Okay, so that was your 55, sorry, not 55, 22 to 880, and then the last one was 34, 320. So I didn't write the working out here because I had shown it to you at the bottom here. Sorry, let me look at the question. How did you, for the month of May? Oh, for the previous question. Okay, let me just check that. Oh, yes, it's supposed to be 300. Sorry, I have no idea why. Let me just check the last one as well. 36,450. I think I wrote down the, okay, sorry. Please go back to the month of March. So it's not 500 here. This is why you guys are getting the wrong answer. it's 550. So what I had here initially was actually correct. It is 57,736 here, and it is 24,310 here. Sorry, that's why you guys were getting the wrong answer there, because it was 550, not 500. So please just correct that on your side. The figure for March, the credit purchase was 121,550. Okay, so that was the month of April, and then the same for the month of May now. Let's go back to the schedule here. So if the sale had taken place, if the purchase had taken place in the month of May, then you're going to have 50% paid in June, 20% paid in July, and then the remaining in August, but August is not in our schedule, so you don't have to worry about that. So it's only the 50% and the 20%. So 50% in June, which we're going to work out at the bottom here, and then 20% in the month of July. Okay, so it's 104,000 as your credit sale, 50% off it first to say that this is paid in June, but then 95% of that is the actual amount that we will pay. So that is 49,400. And then 104,000 times 20% would be your 20,800. And then the August figure, remember, is not included here because this is not part of our schedule. So it's going to fall into another schedule. And then the last one was the 93,600 for June. So this would be, if the sale took place in June, then the only payment we would include in the schedule is the first one, which was the payment of 50% in July. This would have been August and this would have been September. So those are not included. So let's just work out the 50% and 95% of the 93,600. And that would be, so 93,600 times 50% and then times 95. And that is 44,460. Okay, so then you can total that up. So we'll include this at the bottom as your total. Okay, so I am assuming you have calculated these totals. Okay, so that is your creditors payment schedule. And remember, I said to you, sometimes you might be asked to draw up a total schedule in terms of your purchases. So if you are asked to indicate a total purchases instead of just the credit portion. So this table, remember, is a creditor schedule. It's showing you only what you owe your creditors, where you've purchased it and then you are paying over time. However, if they did ask you for the entire purchase, then you're going to also include a column, sorry, a row at the bottom, and you're going to indicate cash purchases. So this is only if they ask it to you. If they don't ask it to you, please again, don't waste your time on this. Don't draw up an additional row at the bottom, only if they've asked you for this. So you're going to look at for the months that you have drawn up the schedule only. So you only drew it up for the month of April, May, June, July. So you're going to look at those months and you have figures of the sales that took place in the month of April, May, June, July. If you If you do have the purchase figure, you can calculate the cash purchase in that particular month. If you don't have the total figure, then you cannot calculate it for that particular month. So let's go back to the information and see whether we do have figures for April, May, June, July. So here we do have the figures for all 4 months, which means that we now can actually calculate the cash purchase. Remember, we said that 65% is on credit, which means that the remaining 35% would be in cash. So now you're going to take all of these figures and you'll multiply them by 35%. And this will be the amount that is in cash, the cash purchase for that particular period. So for the month of April, it was 176,000 Rand. So you'll go to this and you'll calculate the 176,000 times 35%, and that would have been 61,600. Then for the month of May, it would have been the 35% times 160,000, and that would have been 56,000. Then for the month of June, it was 144,000. So that was 50,400. And for the month of July, it was 176,000 here. And you would have multiplied that by 35%, which is 61,600 as well. Okay, so now you have your cash purchase, and generally they would ask you to total after this. So instead of the total being here, it would have been here. So you obviously don't need to do two totals, you'll just do one, but because I already have that one drawn up, I'm just going to include another total here. So you obviously wouldn't have done that total earlier on. So here it is for the first column, the 118,576 plus the 61,600, that is 180,176. Then for the next month, the 109,070 plus the 56,000, 165,070. Then 159, 145, and then 161, 180. Okay, so that is your creditor schedule. Any questions here? Okay, you can have a quick break, and as soon as you get back, we will look at the next bit. Okay, sorry, which column are you talking about? Do you mean the row, not the column? The total row at the bottom. Here. Okay, so it was just taking the total that I had and I added the new one. Sorry, I added the cash. So generally though, you actually wouldn't have this entire column. If they asked you to draw up this total purchases, if they said total purchases, then what you're going to do is once you are done with the credit bit, which was up until this point, once we did the month of June and we calculated all the credit purchases, you would add on a row at the bottom for the cash purchase, and this is where we calculated the 35%. Then you'll just total that up. So you'll add all these figures at the top as well as the 61,600, and that would have given you the 180,176. The same for the next column, it would have been all these. But if they didn't ask you for the cash purchase, then you actually wouldn't have done this at all. Then it would have been this total here that I struck off. So everything at the bottom here wouldn't have been included. So only when they say to you total purchases, or if you're doing the debtors, total sales. But if they don't, then you'll just stop at the credit portion and you'll total that. Okay, let's get started again. So there is an additional example of the creditor schedule. You can have a go at that on your own. So I'll just show it to you. And there is a template also available for you to use. So this is the additional example, and the rest of the information is here. And then here is the template. So you can please work through that on your own. So the next thing we're looking at is a cash budget. So remember I said to you that this is not in your textbook. You will follow it here. And the example that I have up here, as well as the additional example I uploaded already onto VC Learn, is what you will use as practice. So your cash budget is basically, and I explained this to you when we started with Learn Unit 3 as well, it is giving you an idea of your cash inflow versus your cash outflow. So please highlight that in the first point as well. It's an estimation. It's basically a financial plan, but it is an estimate. It's not exact. So it's an estimation of the cash inflows and the cash outflows of a business for a specific period of time. And again, it's also known as a financial plan. So when we look at a cash budget, we're basically looking at all of the ways that funds come into a business. And this includes sales as your main item, and then also any other form of investment, such as perhaps rent income, interest income, an investment that's maturing, that type of thing, versus all of the ways that cash will leave the business or flow out of the business. And this is mainly your purchases first and foremost, then your items such as expenses that need to be paid for in the form of maybe wages, or you have insurance that you have to pay for, that type of thing. Any type of expense, salaries and wages, interest expense, and so on. So it's just summarizing all of this to give you an idea of the cash that will be available at the end of a particular period. So most of the time we do draw these up on a monthly basis. So we'll draw up a cash budget showing you that this is the month available. On average, it's just an estimate at the end of each month to give you an idea of the cash flow and whether the business does have funds available to carry out its day-to-day objectives. And remember, this is what we are looking at in this learning unit. It is managing your working capital, managing the funds of the business to ensure that we have sufficient funds on hand to pay off all of our current liabilities. So this is what we are assessing in our cash budget as well. And as I had mentioned to you, the items that we'll come across are firstly all of the cash that flows into the business, all of your receipts. You'll always list out your sales first, and that will be any sales in cash and your sales on credit. So you're going to find here when we account for your sales on credit, it's a miniature version of your a miniature version of your debtors schedule. So you basically are taking part of your debtors schedule and incorporating it into your cash budget. And then we look at any other forms of income, as I mentioned, maybe a fixed deposit that's maturing or any other type of investment maturing, your rent income, and so on. You'll then add up all of your receipts. Then you measure all of your payments or your total expenses. So this is then looking at first and foremost all of the purchases that were made, any in cash and then any in credit. So again here, your creditor schedule also comes into your cash budget. And then we also look at any other expense, such as your rent that needs to be paid, wages or salaries. Maybe you have insurance that you need to pay for, you have a loan that needs to be repaid, that type of thing. And then that gives you all of your payments. So again, here you'll then sum up all of the payments, and this is known as your cash outflow. So all of the cash leaving your business. Then you're going to work out the difference between your cash inflow and your cash outflow. And this is going to give you something called your net cash flow. So you can just label it net cash flow. You don't have to specifically say inflow or outflow. It'll just be your net cash flow. Once you have your net cash flow, and you'll see that this is found towards the bottom of your cash flow, your cash budget. So net cash flow. This was basically the difference between all of the cash inflow, so all of your receipts, less all of your expenses or payments. So less your cash outflow. So inflow is all into the business, your receipts, cash outflow, all of the money leaving the business. And this would give you your net cash flow. You would then take your net cash flow and you are going to add or subtract, if it's a negative, your opening cash balance. This would then give you your closing balance for the particular month. And then you're going to see, like we had seen in example 3.1, 1 month cash balance, closing balance becomes the next month's opening balance. The idea is that if it was there at the end of, for example, March, it would also be there on the first day of April. So 1 month's closing balance becomes the next month's opening balance. So let's have a look at this in terms of an example. So this example says to you, the following information is available to you. They've given you actual and budgeted information. And you can see that the actual information is based on the months of Jan and Feb. And then the budgeted information is for the months of March and April. They've given you the sales, the purchases, and these are total sales and total purchases. And then they've given you the wages and your rent paid. As you can see, they don't have figures for the last 2 months here because we're going to work those out. And then they said to you that the cash sales is 10% of your total sales, which automatically then would mean that if cash sales is 10%, the credit sales is 90%. Because remember, your sales is broken up into either the portion in cash or the portion on credit. So if 10% is in cash, then 90% was on credit. So please make note of that. Then they told you how you would receive your credit sales. This is exactly what I was explaining to you in terms of how your debtors schedule sort of fits into the cash budget. So they said to you 40% of your debtors or your credit sales is received 1 month after the sale, and then the remaining 50% is 2 months after the sale. Sorry, not the remaining. The next 50% is 2 months after the sale. And then 10% is uncollectible or irrecoverable. So this then is going to be completely ignored because you are then not going to receive this 10%, so you will not include it in your cash budget or your debtors schedule. Then they say to you 90% of all of your purchases are on credit and are paid during the month that follows the month of the transaction. So the whole entire 90% is paid for 1 month after the transaction. Then a loan repayment of 55,000 Rand will be made in March. So this is going to be part of our outflows. It is a loan repayment. This is funds that need to be paid. This at the top is your inflow, it's your debtors. Then your purchases is also for your outflows. It's the funds that are flowing out of the business. we are paying your creditor, or we're paying our creditor, sorry. And then wages that are paid in cash, this is going to be an outflow of cash. So ask yourself the question of, is the money coming in or is it flowing out? Then an investment that's maturing to the value of 320,000 Rand. This means we will receive the fund, so it's an inflow. Rent is expected to decrease. So here rent is an expense. It says it's rent paid here, as you can see. So this is an outflow of funds. And then they gave you the cash in the bank on the 28th of Feb, which was 10,000 overdraft. So that was a negative 10,200. So if this was in the bank on the 28th of Feb, it will also be your opening balance for the 1st of March. So then they said to you on the next page, prepare the cash budget for the months of March and April. And they wanted you to round off your figures to the nearest rand and show all of your calculations. So I'm going to do just the first bit for today because it is a bit of a slightly long example. So I'm just going to do the first bit, which is your cash inflow or your receipts, your total receipts. So I'm going to skip between the question here, and yes, the cash in the bank is always your opening balance, correct? So I'm going to skip between the template that I have created for this example. I have already uploaded it to VC Learn for you, so you can access that here as well. It just makes it easier because it has all of the headings already included for you. But naturally, in your test, unfortunately, you will not get this, so you will have to draw this up on your own. Okay, so here we have for the month of March and April at the top. As you can see, these are the months that you are drawing up the schedule for, and they have also I have included the headings of all, basically everything that you're going to enter into the schedule here, as you can see. And we always start off with your total inflow or your total receipts. So here we always start off with your receipts, with your cash sales, and then we look at your credit sales, and then we look at any other form of income. So it's always done in the sequence. Please also make note of that. If you're drawing up a cash budget, it's always your cash sales first, your credit sales next, and then your other forms of income. So again, it's being drawn up for the months of March as well as April. So let's go to your information and let's look at your cash sales, what would go into this specific block. Okay, so here you have, sorry, let me just skip back. So remember your cash sales, and we saw this with your debtors schedule as well. We are only going to include the months for which you are drawing up the schedule or the budget. So here in this example, we're drawing up the budget for the month of March and April, which means that we are going to include the cash sales only for the months of March and April. So here is your figures. So for the months of March and April, you're going to take March and April's sales in total, and we're going to, sorry, let me just erase all of this on the screen. So yes, this is a total figure. You're going to work out only the portion that is in that is on that is in cash. So we're concerned with just the 10%. So for the months of March and April, your total sales were 195,000 and 210,000. So you're going to go to your cash budget and you're going to work out 10% of these, show the working out and reflect these in the month of March and April, respectively. So for the working out, I've also included blocks in the table for you to make it easier for you to see where your work is. Sorry, let me. Okay, there we go. Okay, so I've included space for you to be able to write down your answers here as well. So for the month of March, your sale was 195,000 Rand, and 10% of that, so multiplied by by 10% to 0.1, that would tell you 19,500 Rand cash sale in the month of March. Then for the month of April, the total sale was 210,000 Rand, and 10% of this was in cash. So you multiply it by 10% as well, and that is 21,000 Rand for the month of April. So I've just included different lines here to write out the working out so that you can show the different working out for each month. It obviously makes it difficult if you have one block to write it both in. So I've just included in blocks, and I'm just going to write it on different lines as well so that you can see where the working out came from. So that's your cash sale, and it's as simple as that for your cash sale. Then for your credit sales, we now need to look at what your schedule was, and we're going to look at figures that were given to us previously, so for the previous months, and identify if anything had taken place in a previous month but will only be paid for in this month. So back to your cash budget. Firstly, we need to look at what was the very first month's information that we had received, and that would have been the month of January. So although we're only drawing this up for March and April, we have to go back to Jan, because it's possible that a sale would have taken place in Jan, but they would only repay us in either March or April. So let's look at the schedule on the next page at the top. We said that 40% would be paid 1 month after the sale and 50% 2 months after the sale. So here, if the sale took place in January, 1 month after that is Feb, when we would have paid 40%. And the next month, so I'll write down here the months that we're working with. If the sale took place in Jan, 40% would be paid in Feb, and 50% would be in March. So we're going to include that figure in our schedule, only the March figure, because that is when we're drawing up the cash budget for. So we're going to work out, firstly, this is a total sale, so we need to work out the 90% on credit, and then we need to work out the 50% that would have been received in the month of March. So here you're going to, sorry, just want to make this smaller and change that. Okay, so the amount was 222,500. You need to work out the credit sales first, so that's 50%, so times it by 0.9, and then you need to work out 50% that would have been received in the month of March. So this then gives you a figure of 100,125. Then we are done with the month of Jan. Let's go back to the month of Feb. So according to the schedule, if the sale took place in the month of Feb, 40% would be received in the month after that. So I'm just going to, while it's loading, I'm just going to write down here on this slide that whatever the amount is, okay, it's loaded, so let me just skip to it. Okay, so if the sale took place in the month of Feb itself, then, so this is what we're working with because we did take care of January already. So that would be, we already did January, so now we're working with the month of Feb. So if you look at the next slide, if it was a 40% that's paid in the next month, that would be the month of March, and 50% would have been in the month of April. So you're going to now go to your schedule. Let's look at what the sale was in Feb. It was 250,000 Rand. We need to work out 90% first, and then work out the 40% that would be paid for in March, and then the 50% that would be paid for in April. So let's go back to our cash budget. Okay, so here it was the amount of 250,000, 90% first to bring it to a credit figure. And I'm going to write it twice because we need to work out 40 and 50%. So times 90, and then 40% is paid in the next month, which is then going to be the month of March. So this would be 90,000 Rand. And then 50% is going to be paid the next month, which is the month of April. So that is 112. Oh, sorry, I'm writing it in the wrong block. So that is 112,500. Okay, so that was your month of February. So let's go back to your cash budget. And now the only month left, and you'll see as I get to, when I get to the cash budget, I'll explain that to you. The only month left that we actually need to now work out a value for is the next month, the month of March, because, so here it is. It's taking a while to load. So saying the only month that we need to actually include now, it's one that's left to include. It's the month of March, where the 40% would be paid in the next month, which would be April. And then the 50% would be in the next month, which would be May. And May is not included in our budget, so we don't need to include that. So the March figure, the only thing we're going to work out is the 40% that would be in the month of April. So the rest of it doesn't get included because for the month of April, for example, 40% would be 1 month later, which would be May, and 50% would be the next month, which would be June. So that cannot be included because our schedule, our budget is only for the months of March and April. So we're not going to include those months. It is literally just the month of March that we need to account for, which will be received in April. Sorry, just give me a second. I'm not sure why it's Sorry about that, guys. I have no idea what happened there. Okay, so let me just finish that last one and then we'll stop for today. Please can I confirm that you can still hear me? Okay, perfect. Okay, sorry about that. So yes, as I was saying, the last one that we were looking at was just the month of March. So here for the month of March, we are basically saying that whatever sale had taken place on credit, the 195 times the 90%, 40% would be paid in the next month, which would be April, and then 50% in May. But May is not included in our cash budget, so it's only the 40% in April. And even for the month of even for the month of April, this is not even going to be included at all because here, if the sale took place in April, then 40% would be in May, which is not in our schedule, and 50% is in June. And both of these are not included in our budget. So we can ignore the April figure. So it's literally just the 40% for the month of April. So you would then go back to the cash budget and include the figure for the month of April. Remember, the actual sale is 195,000 Rand. 40% of it is going to be paid for in the month of April. So you're going to work out the 195,000 Rand first multiplied by 90% to get to the portion that is on credit, and then multiply it by 40% to show the portion that will be received in the month of April. Okay, so yes, that is correct, 70,200. Okay, so I have no idea why it's not loading the cash budget, so I'm just going to stop there for today. So that's the not the whole of the first part. I still do need to include the one other item that falls into your receipts, but I'll start that in the next lecture when I see you again. I think it's next week. I don't think I see you guys tomorrow for finance. So I will go okay, so then I tomorrow for that, and then I will continue with this and finish off learning unit 3 in the next lesson. Please make sure that you download the template of the cash budget, and if you are able to print it out or if you're able to work with it on your tablets, that I have uploaded another example of the cash budget from onto the VC Learn More Resources case activity folder. Please download that as well so that we can go through another example of the cash budget. Thank you guys. Enjoy the rest of your evening, afternoon.